Finance Committee meeting. This meeting is being audio and video recorded. And let's see, let's have a roll call, Laura.
Sure. Councillor Maori,
Here.
Councillor Labarge,
Here.
Councillor Moulton,
Here.
and Councillor Nash.
Here.
Excellent. Okay. So we have our quorum, and then we have the approval of the January 3rd minutes.
Move to approve.
Second.
Okay. Laura?
Sure. Councillor Maori,
Yes.
Councillor Labarge,
Yes.
Councillor Moulton,
Yes.
and Councillor Nash.
Yes.
Okay. So then we've got our sole agenda item tonight which is to review and consider recommendations on the Scanlon proposal for our auditing services for the city, FY 2024 to 26. Okay. So you might have, I don't know if you heard President Nash, that Tom has to go early, so we're going to address, we can have a discussion, but also I want to make sure we address any questions to him that we may have.
Great idea. Thank
Okay.
you.
So yeah, I'm opening the floor to discussion. And we also have the director here, of course, which is great. I'm just looking at the attachments. So does anyone have any, oh yes, Councilor Labarge.
No, Councilor
Oh.
Nash had his hand up.
Oh,
first before
excuse
me.
me.
Yeah,
Yeah,
I just
Councilor
had a
Nash.
thought if Tom could give us a quick overview of the proposal and, what we should expect from this and explain why we should be doing this and why it's a good idea to hire Scanlon to do it. He can throw in a little bit of sales pitch as well if he'd like. And but yeah, give us an overview of maybe a little background on why cities should be doing audits like this.
Hello, old man, Tom Scanlon. It's a beautiful night outside.
Yeah.
Mhm.
I don't know how much of a salesperson I am, but I'll give it my best. So, I mean, there's basically three reasons to have an audit. One is a single audit, which you're required to do, and that's if you spend over $750,000 in federal funds. And you do that. So by default, you have to have an audit. And then the second is issuing bonds in the bond market. So and you have bonds in the bond market. And then the third is just general sound practice. So this is a financial audit. It's not a forensic audit, which seems to be the term out there now. So it basically off your financial statements is assess risk. There's been a lot of, with COVID, there's been a lot of more programs out there, more federal funds, a lot of more complexities, especially with DOR reporting and items like that. So the fee jumped up a little, off the top of my head, I can't remember, I think went up like $3,000. It has to do with just with the more GASB's coming out. Was the GASB with leases that was this year. DOR is more with the free cash reporting. So, and then the other thing that kind of fluctuates the fees on the single audits. There's a certain percentage you have to test. It's a matrix, so that fee can jump all over the place. But traditionally, you've been between 3 and 4 major programs. So the quote that we gave is with 4 major programs. Again, that could go down to 3, but with ARPA, I think you're going to pretty much stay at 4 for the next couple of years, but possibly jumping up to 5. So, and I know we're always there for questions, helping the city. We believe the audit's not just we come there for 2 weeks and we're in and out, then you don't see us again. We encourage to communicate with us so we can address any issues. For instance, throughout the year, maybe have problem with like one department, and then during our risk analysis, we'd go out to that department. That's about it for me.
Yeah, Councilor Nash.
Yeah, so Tom, in terms of testing, you mentioned this is in a forensic audit. You're not going down deep dive into all of the city finances. What you do is you're looking at particular departments and practices. What is it that inspires you to test certain things? What is it you're looking for?
So what drives the financial audit is basically your financial statement. So you're looking at your balance sheet and you're looking at your revenue and expenses.
Mhm.
So that's kind of where you start. And as a firm, we're always going to put an emphasis on the controls you have in your collector's office and your treasurer's office, because we feel your cash is your number one asset, and your accounts receivable, like your personal property and real estate, is your number one revenue source. So we spend a lot of time in those two offices, making sure you're balancing cash on a timely basis. And we tie in like your revenues and your state receipts. So we make sure your revenues are going to the correct place. So we do a lot of analytical. We look at like budget versus actual. We'll do an analysis of your special revenue accounts. And one of the things we do is we'll look to see if there's deficits. Obviously, deficits are bad, so we're gonna go look at that account. And high surpluses are bad. So if you have an account that's coming in and going out, probably not gonna look at that. For instance, like Chapter 90, we know Chapter 90 traditionally is a reimbursable type grant, so we expect that to be a deficit.
It's the same amount every year.
Yeah, so if we see a surplus there, obviously we're gonna go look at that, because we're gonna say, okay, that's a misclassification of a revenue or an expense. The same thing like on the school grants. Again, like if like ESSER was building up, we'd say that's unusual, so we're gonna go look at that. Say like Arts Council, the money comes in, the money goes out. That's what we expect to happen under like an Arts Council grant. So we do a dive into a lot of analytics. And then on like the collector side, we will go in. There's a few things like we use a lot of ratios. So we like to see, and unfortunately COVID has messed this up for us, as we used to do a percentage of ratio of cash going to the bank for like say 1 month. So we like to see cash deposits. And we still do that, but it's not as effective for us as it's been in the past, because a lot of people have gone to online, which is good because there's no transaction that occurs at the counter, goes right to bank. So we do a lot of like analytics, and then we dive. So if we go to the collector's office and the outstanding detail list doesn't match the general ledger of the city, which is 2 different departments, we'll go down to a deeper level and say, okay, what's the reason why? Is there a timing issue? And then we can go out and keep on clawing back until we eliminate the variance, we get the variance down to an acceptable level. And then like the variance has reoccurred, then we notify you in a management letter type thing. So it's risk-based. And then, so those are your main like controls, like your warrants that goes out. Obviously the budget you adopt, we do a lot of making sure the budget is correctly set up in the general ledger. So we take your council votes and we analyze them and we tie them into the general ledger, and we make sure that budget is accurately reflected in the financial statements. Because off of that, we're looking at the variance column and looking for negatives and big positives. So the budget isn't right. That procedure we're using to look at the column far out doesn't pay too much for it. Not as effective. And the same on the reverse side, if departments are carrying over expenditures, the encumbrances, we'll look at those to make sure they're not blanket encumbrances, but you're just carrying money over. So put a lot of emphasis on there. So a lot is driven off of analytics expectations. So, and then if there's like throughout the year, I mean, lots of different departments, like treasurer's office, CDR's office, if there's any problem departments, we consider those like your secondary departments, like your recreation department. And then we'll go up there, things come to our attention. So we start in the treasurer collector's office, and we'll visit the Department of Public Works, because they collect the water and sewer out there. So those are the main departments where we're in. Obviously the school, but the secondary departments that your secondary receipts, we hit those. We try to hit one department over a 3-year period.
Well, okay, thanks, Tom. Councilor Labarge.
Thank you, Counselor. Jim, thank you very much about the quick overview of the proposal, because I was going to ask that. Tom, I know at one point we worked with your dad very, very closely.
Yep.
Very closely for many years. And when I hear you saying you look for different departments, and I heard you explain like the main departments, DPW, and what were the others?
Collector's office, and your main finance, like treasurers, collectors, assessors. Charlene's obviously in the city auditors. Those are your main, like state receipts are coming through there, your the property taxes, and the school department's your other main department.
Because dealing with Scanlon for so many years, I find that talking with our financial director is very, very critical on updates on the financing in these departments. And I have to say, our new financial director, Chardine Nardine, is excellent, excellent. And she was taught by Susan Wright, who was top notch. I have some concerns here, Tom, on what I saw on the chart and the expenses, which I don't have a problem with that. Okay, I'm very happy to see that. My main concern is, I remember at one point, you're looking at Scanlon's being extremely thorough, and there's no question about that. When your dad came in and talked about how he went into the treasury's office, looking at what goes on in there, and he had suggested more training for the staff in there. And that was critical at that point. And he did do that, and it made a significant difference on how it was running. So I want to thank your dad and your company for that, because I thought that to be very, very valuable. Right now, when we're just saying a quick overview proposal, how much do you spend with our financial director and the mayor and her team?
How much time?
Yeah, monthly, or how do you communicate with each other?
Well, we're there for 2 full weeks doing the audit on site. And then, like I said in the beginning, like I encouraged communication throughout the year. I would say during like our audit season going through, it's pretty
Intense.
yeah, I was gonna say that the probably communications maybe on a daily or weekly basis. And then after the audit is over and we issue it, there's always DOR items that come up. I mean, as a firm, we encourage communication. So I mean, I don't know how much time I can put on it. And usually, like myself, I'm usually involved. Like I'm not usually involved in the audits. You know, I'm not out playing golf or anything. I would probably like to be playing golf and fishing, but
I know, and I know that we've always been told if we ever had questions to call the company. And
yeah.
I've done that, and they've been excellent about that. So I want to thank you for being here and explaining the particular departments that you were looking at this point. So thank you for that.
Yeah.
Councilor Labarge, I think Director Nardi might want to add something to your question.
Yep.
So thank you. And good evening, everyone. Yeah, I just wanted to say that I working with Scanlon and Associates these last 2 years has been excellent, and Tom and his staff are always available. So to give you an, you know, it really depends how much time we spend, but there are 2 issues that I would like to work with Scanlon and Associates on, particularly since we have a new auditor starting. There was an issue there that we wanted to talk about, and also about tracking our fixed assets with Joe Cook leaving and Will Coffey there. I've asked Tom's firm to come in and train us to make sure that we're doing things properly. And it's one of the other reasons that I have advocated strongly that we stay with the auditing firm that we have now, for a couple reasons. And you heard Tom, if I may, Chair Maori, just go in a little bit why I recommend this. Tom mentioned the fact, thank you. Tom mentioned the fact that they're used to seeing certain things. And now you have a new procurement officer. You will have, for the years that you're talking about, you're going to have at least for the first 6 months of 2024, you're going to have a new auditor, and then 2025 will be a new auditor completely. I'm relatively new, and then you also have a new school business administrator. And I feel that it's really important to have an auditing firm in there that's used to seeing a certain thing. And so therefore, if they're not seeing that, we get knowledge, we get ahead of that. As you said, for me, I don't look at an audit as a bad thing. I don't look at it as enforcement. I don't look at it as a terrible oversight. I look at it as a partnership. And I think Tom's staff is very professional. They change their leads, so there's not that concern about, there's a fresh set of eyes looking at everything, every audit. But I also feel like we can call his staff and him anytime. And Tom and I have spoke like 3 times in the last week about different items where I needed some guidance on it because it was new for us. So for me, those are the reasons I really advocate for this next 3. I think the proposal is fair. As Tom noted, with ARPA and ESSER money, that has increased the programs you have to look at for the single audit. That was where the increase was. And I do feel like we really need to have some continuity in the auditing because we have so many changes within the staff within the city of Northampton. So thank you.
Thank you,
That's
Shonda.
a compelling point. Yes, Counselor Moulton.
Thank you. First, thanks to Laura for all the research that she did and pulling together all the documents that helped us to compare the current bid, Scanlon's last bid, and some other communities in the area. So that was very helpful. Several questions for Tom. First, very basic, Tom. I'm not familiar with the acronym GASB or GASBs that you referred to.
I wish.
What is that?
I wish I wasn't. But it's Governmental Accounting Standards Board. They set the accounting standards.
Okay.
So
So
you have
they
out in the financial world, you have FASB, and then the government's GASB.
okay. So they set the benchmarks that you have to meet. I believe that I just heard Director Nardi say that you change leads every year. That means you have a different auditor from your firm being the lead auditor, so that you rotate that.
Correct. Yeah. So it's basically me. I mean, I'm the partner on all the engagements, but I rotate between Jeff, Kyle, Jeff Denton, and Kyle Mitchell. They kind of take the lead. They swap off in certain areas, so they're not like always doing cash or always doing like receivables. So between those 2, they tend to switch. Then I have a third person in the mix that's just up and coming. They have like 12 years of experience. They're starting to get in. So
Yeah. Well, that's great, because I think it's important, as Director Nardi said, for the continuity with the firm, but I also feel it's important within the firm to have different eyes on the the departments and what you're looking for, so that different eyes will sometimes spot something that looks out of place.
and then we try to recognize as a firm. I mean, I fully I mean, I know I've done like fixed assets everywhere for 40 towns. I know in the 40th town, they're probably not getting the best fixed asset look at in the world. So I mean, I try to vary up the staff and put them on certain things. They don't always get into that norm.
That's great. And then my other question is, you switched in your proposal for this new 3-year contract to a fixed fee for the single audits from the per diem that you had charged this last contract.
Yeah, I
wondered the reason for that.
It's still by the day, but I've just estimated at 9,600. It was based on 11 days, if my memory serves me right.
Okay, so that's an estimate then that will be based on real numbers, depending on the number of days you spend on those.
So I believe I base it off of 4 major programs, which traditionally you have been. ARPA can kick it's a percentage of your federal expenditures you have to hit. So say you spend $10 million in ARPA in fiscal year 24, let's say. That may put you into another level where you have to have a 5th major program. And if that's the case, it would be $850 a day. Approximately probably 4 days. believe you're gonna fit into that for the
Mhm.
next couple of years.
Mhm.
So,
Okay.
With cities and a lot of the money, it's harder on the single audits, but if you take like towns. I mean, town of Auburn, Grafton, I can tell you they're gonna have two major programs from now until 20 years from now. Unless they have like a significant revenue source, and ARPA kind of messed with that formula on the percentage of coverage, but I don't anticipate that going that dramatically over.
Okay, thank you.
If that makes sense.
Laura, is it convenient to share the audit fee comparison sheet
Yeah,
you attached to,
Sure.
if it's not a burden for you? I just
Nope,
wanted
nope.
to ask Tom, and of course, if anyone else has other questions.
No.
My question really, Tom, was when you look at the size of cities, so I mean, when you go in to kind of come up with an amount for us, is it based, I mean, obviously it's the size of the budget plays, is that the kind of major, or the complexity of the budget? How do you, when we're looking at these comparisons, I'm just trying to think about
I mean, size definitely matters
size,
when
yeah.
you're looking at the budget, it definitely matters, but it's more complexities, and number of programs you have, like how many special revenue funds you have. So you have two school departments where like
Yeah.
you take like Greenfield's one school department, so they only have one Title I program, but you have two Title I programs. You have it at the Smith Oak and you have it at Northampton High. So it goes on complexity as number of programs. In the federal side and retirement system. So like Amherst doesn't have a retirement system.
Hmm.
I just want to say the Laura did a pretty good job putting it together, because it can get complex when you try and compare to other communities, because I have done that before trying to get a basis. So like the end of year reports is in there, and like I don't know if Amherst's end of year report is in there. The ones I can be familiar with is obviously Chicopee and East Hampton.
It wasn't able to get a breakdown from Amherst of what their $65,000, how it's broken down.
Yeah, so if you wanted to get like a comparison, like to give you like Amherst, if you want to take Amherst, I'm a big assumption on my part would be it's going to be two major programs in there, because that's traditionally what it is. Then you'd have to add a retirement system, like the fee for Northampton retirement system, kind of compare it, and then the end of year report, I don't know if it's in there. But it's yeah, I mean, the audit fees have shot up so much in the past 2 years. There's two reasons for it: is lack of help, just trying to get somebody. I mean, we've been trying to hire someone for a year and a half now and having difficulty. And then two, just the new rules and regulations, just with the ARPA, the monies came out before the compliance supplement came out. And just trying to audit that, the difficulty, just have to, you have to learn the program, the compliance supplement coming out. So audit fees have been pretty much increasing. So.
Well, thank you again. Yeah, thanks, Laura, for this research. It's invaluable. Thank you. We can
Welcome.
probably stop screen share. Thanks.
Okay.
And then we can look at people. I just wanted to take a look at that. I have one more question, but does anyone else have any other counselors have questions?
no.
My other question, well, Director Nardi answered my question about how she felt about working in this auditing service, but I was just curious about the school systems. Are they treated, when you look at our budget, do you have different eyes for the school system? Are they kind of apart from and then you integrate it into the city budget, or do you kind of just treat it like another department? Does that make sense? Do you treat it
Yeah.
differently because
We treat it like another department, but
right.
it's your largest department.
Yeah.
So obviously.
That's why I was wondering, because it's almost like its own, and it is its own entity, and it's part of our larger budget, but it's complex itself. And I was
Yeah, so we definitely go out there and we spend several days in the school department looking at their grants, and revolving funds, like their school choice.
Yeah,
Specifically, like where we, like the Department of Health, we're probably not gonna go there unless something pops up. So we're definitely going to the school department. So, and then when we're testing encumbrances, see if they're valid and they're accurate. Obviously, the school department's gonna make up a majority of that number, so we're covering that in there. So it's treated like another department,
yeah.
but there's a main focus on it. That kind of makes sense. So, yeah, I mean, we definitely, when you look at payroll, the percentage of payroll expenditures, obviously, we're gonna pull more payroll testing from the school department side than we are from the city side, but so.
Well, thank you for that. That was,
I thought that was an easy question to answer when I think about it. It's like, yeah, it is another department when we assess our testing, but we are concentrating.
Right.
Yeah,
yeah, there's a lot of components to it.
correct.
I see. Thank you, Tom. I see Director Nardi has her hand up.
Thank you. I just wanted to share, I did take the opportunity to reach out to the finance departments to see if they had any feedback they wanted me to share. I was only unfortunately able to get in touch because it's summer season. I was able to get in touch with the auditor, the assessor, and Bobby Jones, the business administrator at the school. And they are also recommending, for the same reasons, to have some continuity and to stay with Scanlon. They also just wanted to state that they feel that the service that they get is professional, that they like the ability to be able to reach out, especially the auditor. She also reaches out a lot to the auditing firm when she has questions, and she feels that the firm has been very responsive. So I just wanted to be able to share that that was feedback I received from them as well.
Well, that's very helpful feedback. Thank you. Okay, Counselor. Yes, Counselor Nash.
Yeah, so I know Tom's got to go in
Yeah.
a minute or two here. And so I just wanted to note something that's significant about this, what we're doing here. It has to do with the separation of powers, and that, Tom, your proposal is addressed to City Council. It's not addressed to the mayor, and that you're doing this work for the council, correct?
Yep, I think that your charter, yes.
Yes, and so that, so this is the separation of powers at work here. The mayor operates administrates the city, and we are responsible to make sure that the city's finances are in order. And this is one of the ways, probably the biggest way we do it, is to have, outside experts coming in to oversee, to probe around. And I have to say, it's great that Director Nardi is here and fully appreciates having an investigation, that it's helpful. It's like having a good editor when you're working on a writing project, that it's welcome criticism rather than, oh no, we're going to get caught or it's a bad thing. Right. So anyway, I just wanted to note that, and want to thank Tom for working for us for all of these years.
Yeah.
Tom, I'll not be on council next year, so this will be my last meeting with you. So good luck in the future. But I've always appreciated what you've done in the past, and that we generally have very clean audits. And that with some recommendations to modify some practices here and there. And it's for me as a counselor, it's been great working with you, and I appreciate the work that Scanlon's done over the years.
Thank you, and good luck.
I'll let you know how it's going.
Jim.
Okay, thank you. Yes, Councilor Labarge.
Yes, I also want to thank Tom Scanlon for being here. I think he did a thorough presentation for us councilors. And I want to thank Councilor Nash, because yes, this is where the power is with City Council, a separation of executive to legislative. So thank you, Jim, for that.
Well, he did,
Okay,
yes, he named that it was there. I don't know that he did the separation, but
it is a separation of power.
no, it's good. It's very, I think it's really good for the public to actually understand
Yes,
what's council's purview, because there's often misconceptions about that, or it's conflated together. So I think it's really helpful to always kind of take that moment to point that out. Yes, Council Labarge.
yes, thank you so much. I also want to thank our wonderful finance director, Charlene Nardi. You are awesome. You can call her, she explains very thoroughly, just like Susan White. And I want to thank you for being our financial director.
Thank you very much. It's an honor to work for the city, for the mayor, and for the council. Thank you.
Thank you. I would like to make a motion
Yes.
to recommend the scale and proposal for auditing services for the years 2024 through for the year 2026 with a positive recommendation to full city council.
Okay.
Second,
Let's see. I don't know who seconded there. Did you get that, Laura?
Counselor Moulton, yes.
Okay, good.
Stan beat me.
I didn't hear you. I
I beat you.
He's louder.
Okay, roll call, please, Laura.
Well,
And
okay.
oh, excuse me, Counselor Moulton, yes.
yes, thanks. Just to explain my support for this, based
Right.
largely on our past experience with Scanlon, as well as Director Nardi's recommendation. I think the continuity is critical with a number of new staff, as Director Nardi pointed out. And I think the service that we've gotten from Scanlon, not just the audits, but the training that Councilor Labarge referenced in the treasurer's office, and the additional training that Director Nardi mentioned for some of the new staff is a real, it really speaks to the kind of relationship that the city has with this particular firm that is, that is doing some very important work and could uncover problems. Yet there's it seems to be a sort of a collaborative approach to that, and I appreciate that.
Yeah, I felt that Director Nardi's brought up some really compelling points in terms of, what our city needs right now. And that's a big deal. That we have continuity. So thank you for that. All right, anyone else? Any counselors? Any other discussion? If not, we can go do a roll call, Laura. Thank you.
Counselor Labarge,
Yes,
Counselor Moulton. Whoops, he might be frozen, or
Can't tell.
Counselor Moulton?
I think nope. Counselor Moulton, we're voting on the positive recommendation. Huh,
what's happened to him?
he's not frozen, but maybe he
Okay.
lost.
He looks like he's
Audio or-
frozen.
Hmm.
Stan,
Counselor Moulton, can you hear us?
Yeah, I can hear you. I couldn't hear Laura.
Oh,
I'm
okay.
sorry. Okay, yeah, we're up to you on the roll call for a positive recommendation.
That is a yes.
Okay, Counselor Nash
Yes.
and Counselor Maori.
Yes.
And that's everybody.
Yep. Okay, so this goes to council with a positive recommendation. And thank you so much, Director and Tom, for being here tonight. Let's see, the Finance Committee, we have, let's see, just new business, which I do not have. So I could entertain another motion.
move to adjourn.
Second,
Counselor Moulton,
yes.
Counselor Nash,
Yes.
Counselor Maori,
Yes,
and Counselor Labarge.
Yes.
okay.
Thank you.
We are
Tom.
adjourned, and